Hello, everyone. Up next, we have a panel that will talk about regulation, laws, and legality in crypto, and what that next era of crypto regulation will look like. The panel will be moderated by Gerald Gallagher from Say Labs, with a panel is full of people who probably look familiar from crypto Twitter and what they've done throughout their careers. I will let him introduce his panelists once they're up here, and enjoy.
Yes.
Okay. All right, there we go. Hi, everyone. So we are a panel of attorneys keeping you from happy hours. So really appreciate everyone sticking around this afternoon to hear us talk about the future regulation as it relates to crypto in the United States. So I'm Gerald Gallagher. I'm general counsel at Say Labs. We're a layer 1 blockchain scaling the EVM. I'm joined today by V. Lee of Anchorage Digital, Chris Grieco of Rain Cards, Jay Stolkin of Multicoin Capital, and Laz Piper of the DeFi Education Fund. And yeah. So it's obviously been like an incredibly busy time. I guess maybe I'll sort of ask a first question and then let the panelists also maybe give a little more context on themselves. It's been frankly like hard to keep up with the amount of developments. Just this afternoon, there was a bit of a revision to the legal understanding of meme coins that was put out from the SEC. We had the Bybit exploit about a week ago now, and just a lot coming out of Washington and a lot on the litigation side as well. So panelists, I'll turn it over to you, and maybe we can start with you, V. Like just a bit more about yourself, and then also just what you think about the recent developments and how that's impacting our industry.
Yeah, I mean, I think what's happening right now is not just like a reset of the approach that we've seen to crypto regulation for like the last 4+ years. It's also like an unwinding of a lot of what's happened, right? So you see the SEC dismissing cases and investigations, really starting to engage with industry really for the first time. Congress is really committed to passing stablecoin legislation, market structure legislation. You have the White House setting up its own presidential working group, right? So all of these efforts, I think, just reflect a totally new approach to crypto regulation. So I mean, I think it's like very positive, obviously, for the industry. And legal regulatory clarity is on the horizon, which will be like good for everyone in the space.
Yeah, I mean, I would echo that. I mean, I think it's important that these things are done, and they're done. It's actually surprising how quickly they've moved on some of these things, reversing the last 4 years. But the things that have happened thus far, I think, are relatively easy. And it's not to say that, as I said, I'm surprised that they've moved so quickly. But I think the bigger tasks and the bigger lifts are going to be on the legislative front. Some of the stuff that's coming out of the SEC is really promising, but it's not really necessarily enduring. And so there still needs to be a bigger framework in place for some of these things. And, most of the things that the SEC was charging in the previous administration have a 5 or 7 year statute of limitations. And so just because the current SEC is not as angry at crypto doesn't mean that a future administration couldn't take that out if we don't get something more enduring.
Yeah, not a ton to add other than I think what's been interesting is what we're seeing particularly out of the SEC thus far is not necessarily par for the course with an administration change. For instance, it's not typical for a new administration to just straight up dismiss suits that were levied by the prior SEC. More typically, you would see settlements and ongoing discussions, and the fact that this current commission is just dismissing suits against large players in the crypto space is a positive signal, but echo the sentiments that we're just at the beginning here. We don't know how things are going to shake out, and that the work is really just starting in terms of the industry engaging with both agencies and Congress to ensure that we get concrete guidance and legislative clarity as well.
Yeah, I don't think I have too much more to add to that. I think that with securities laws, we're seeing things move pretty quickly. And as Chris said, that seems to be like kind of the easier stuff. I will say I am very curious to see where things go with Bank Secrecy Act things like Tornado Cash. But as of right now, I think the sentiment's pretty solid. With the crypto task force that came out and the request for information, I feel like that's a pretty promising thing.
Yeah, one of the reasons that I was really excited about this panel is the variety of viewpoints we have, right? So we have custody, we have payments, or at least payment rails, we have investing, and we have policy. I want to go back to probably one of the things that, this is a very builder-focused event, right? And so we want to be able to talk to founders about how this actually affects them. Given this new kind of sort of meme coin guidance, or at least the chance at some more regulatory clarity, and maybe just overall less regulatory pressure, Jay, how does this affect how you guys look at things at Multicoin? Are you guys just going to be aping into meme coins now, or what does that look like? How does that change the landscape for you guys?
I mean, it's all of it is positive, right? I think it's a great indication that Congress and the agencies are willing to move forward and provide actual guidance. In terms of what that means for the investment process at the moment, I mean, I think we're still very much in a wait and see situation where we need to see how things are going to firm up. I think historically, when you talk with potential portfolio companies and potential investments, all you can really look for is, are you at least thinking about the regulatory issues? We know that you don't have a perfect answer for all of these, but are you at least thoughtful in your approach? Have you engaged good counsel? Are you thinking through the regulatory issues? Are you thinking through what jurisdictions you'll be able to serve given the products that you're proposing to launch? And I think now the risk of enforcement against these companies is less, but we're still going to be looking for companies to be taking a thoughtful approach, and as things firm up, we will actually be able to engage further in sort of legal due diligence, in the sense that if we have clarity as to how a certain product can launch and serve a particular jurisdiction, we'll be able to look deeper into whether or not the project is coming into compliance with applicable regulation. So I think moving out of the gray space is going to be great for investing. It's going to open up all sorts of new opportunities for regulated projects and for compliant projects. And I think overall, from a due diligence perspective, this is positive.
Yeah, and Chris, you guys, I think maybe just talking a bit more about what Rain does, but you guys are incredibly close to founders, right? And so maybe this. I think you have some takes on essentially how we could be looking at compliance and whether or not things have really changed yet. Does this impact at all the way you guys will work with companies or partners?
Yeah, just for background, so I work as general counsel of Rain. We're a stablecoin-backed Visa credit card issuer. So, I think there are a lot more projects that are going to come online. We're going to have people that are looking to, incorporate payments into their product roadmap. In terms of what's going on a regulatory front, I don't anticipate huge overhauls of the BSA or sanctions regime. I think there's very promising signs with some of the hearings that were had on debanking, and maybe there'll be minor tweaks. But if you're operating in the payment space, I think the idea that you're not going to have to KYC, you're not going to have to abide by sanctions screening or something like that, that's not going to change in the near future. And so I think you just have to be prepared. And that is kind of a dichotomy for many founders. A lot of DeFi founders are just kind of opposed to KYCing and want it to be a little bit more open than that. And I think that's something in the U.S. and internationally, you're going to have to kind of contemplate as you're developing what kind of product you want to operate with.
And V, you guys at Anchorage are one of the few, I think, kind of like industry sort of standard bearers in the custodial space. And there's been, I think, obviously the repeal of SAB 121 was hopefully a positive direction for you guys. But there's still a pretty big lack of clarity around custody of digital assets. Do you see anything coming on the horizon, or is there anything that's going to change how you guys operate in the near future?
Yeah, so we're really uniquely positioned because, this is crazy to say this like this many years into the industry, but we're literally the only crypto company that is federally regulated, and it's because the OCC under the last administration took a very different approach from all of the other federal regulators, where they said, okay, this is a new asset class, it's a new technology, but let's see how we can work with like a crypto company to figure out how they can offer these services in a way that is safe, right? So like not risk elimination, which is what other regulators pursued, but like risk mitigation. And as a result of that, like we've been able to build like a successful company, and the OCC has gotten all of this experience actually regulating a crypto company. We want to see more of that, right? Obviously, hopefully the next few years will bring more productive working relationships between federal regulators and crypto market participants. Obviously the things that we're very focused on is making sure that any legislation or regulation contains like custody standards that are pretty rigorous. People think of custody as something that's very straightforward, and maybe it is for certain kinds of tokens, but actually it's much more complex from both a technological perspective and a compliance perspective than most people would think, especially when you're talking about like the more esoteric tokens out there. So that's one thing that we're really focused on. And then, obviously our clients span the entire crypto industry, so we want clarity for them.
Yeah, I think one of the through tones of the way everybody is operating now, and you just sort of highlighted it, is the previous administration versus what we're dealing with now, and sort of the feeling that there's much more of an open door policy with regulators. Laz, you guys obviously deal directly, with legislation. You guys have done, you guys have sued the SEC directly. Maybe just tell us a bit more about like what DeFi Education Fund does, and also have you guys seen the shift? I mean, is it truly that sort of paradigm, like just the previous administration and the engagement you guys were able to have versus now? Like how does that impact what you guys do?
Yeah, so at the DeFi Education Fund, we meet with lawmakers, representatives, senators, and we educate them on DeFi. And so, we've had allies in Congress throughout even like the past administration or the past Congress, and but I think that's growing broader and broader. Increasingly, there's an increasing support in Congress for DeFi and to kind of legislate things a little bit differently, because we have to consider, of course, that we're dealing with software here, not intermediaries in the traditional sense. And then in terms of from the executive branch, we were dealing with a very hostile administration, and now there's one that's in place that now kind of has a more open-mindedness with it. We can see that with the crypto task force, but also the executive order that came out in January. And so it's kind of a little bit refreshing to be able to, at least work with the White House instead of against it.
Yeah, I think it's super interesting work, and it also reminds me, I think, we've been coming at this from a very US-centric perspective, but obviously ETHDenver has become something of a global sort of crypto conference, and different jurisdictions all over the world have dealt with this very differently, whether it's Mika or something like Vara is trying to do in Dubai. A lot of different approaches out there and a lot of different options for founders. Do you guys think that we're going to get, and this is sort of just open to the panel, do you guys think we're going to get more certainty for builders here in the States in the near term? Do you think there's anything that we can potentially borrow from other jurisdictions? How do we keep the ball rolling here?
I mean, I can be the downer and say I don't actually think we're going to get real clarity. We might have something come out from executive branch agencies rulemaking, something like that, but that's not actually as enduring as legislation. And I'm pretty pessimistic on their legislative front just because of the nature and the makeup of the current Congress. Like, there's a very slim margin in the House and a even slimmer margin on the crypto front in the Senate. So, I mean, it's not to say that like you can't build in the U.S. I think that obviously the environment's going to be much better over the next few years, but in terms of like real enduring legislative solutions, I'm pretty pessimistic on that.
I'm curious, does anyone on the panel have a good idea of maybe what we'll get to first? Or is anybody optimistic about, whether it's market structuring or tax? Jay, you look like you have something to add.
I think it's possible we get stable legislation or stablecoin legislation in the near term. I think market structure is going to take some time to sort out, and I think that's okay because I think we need to think very carefully about it. This could be our best and only shot on goal collectively as a we, and so I think to answer your first question, what I would say is I think it is possible. I'll be slightly less pessimistic. I think we can get incremental progress here. I think we can get stablecoin legislation. And even putting legislation aside, I think we can get a lot of helpful guidance from the executive branch, from the agencies, from the SEC, from the CFTC, from the Department of Treasury. But it's going to be incumbent upon us to ensure that happens, to make sure that we really drive the ball forward, that we work together, that we approach the agencies in Congress with a unified front, with specific asks, with proposals for legislation rather than just asks. I mean, I think it's very important that we coordinate well across the industry and approach these agencies with concrete asks as early as possible so that we can actually get the ball rolling.
Yeah, I think like one thing we hear a lot from Congress when we do policy work is like, okay, we get it. You hate this proposal, but like, what's your alternative, right? We hear that a lot, especially when it comes to a lot of the BSA and like illicit finance legislation or legislation that touches on that. I think historically the industry has not done a great job of actually putting forward good ideas on that front. But I get it. It's hard. It's one of the most complex areas of crypto like regulation, right?
Yeah, I continue to believe that that's the most difficult and pervasive issue that we have. I mean, it's fun to talk about securities laws issues and commodities laws issues, and they're relevant and important, and they've been plaguing the industry for as long as I've been working in it. But the BSA and compliance with the BSA is the hardest issue to deal with, and it's much less partisan, in the sense that everybody cares about it, right? So I think that where on certain securities laws and commodities laws issues, we may be able to appeal to one side of the aisle. On the BSA front, that's less likely.
Yeah, sorry. But I also, I don't have much to add in terms of what everyone else has said, but I will say that I think it's a little bit surprising from like the EU that they were, just because they're pretty regulatory friendly, or not friendly, but aggressive, that with MiCA they really just focused on custodians and left out DeFi for later. And I think that's something that we still kind of need to do here because, as my colleagues have really said, I think that it's just really not an easy answer, especially with like the Bank Secrecy Act and things like that. Like we have software, not really intermediaries anymore. And so like, how does that look when you can't really collect information on your users? Nor should you be forced to if you're just developing software.
Yeah, I mean, I would say the BSA and kind of the national security aspect of crypto is the most dangerous thing going forward, right? So you have a huge outpouring of support from Republicans, but if you think of what could split a lot of Republicans off, it's some of the national security stuff, like $1.5 billion going to North Korea. So that could very easily split the kind of coalition of folks who are working in favor of crypto. And so like making sure that protocol security is more buttoned up, making sure that money and tokens and whatnot are not going to bad actors. It's something that will continue to be a problem for us, I think. But yes, coming up with solutions is paramount in trying to solve it.
Yeah, I think it's just important to hammer home that it's not a free-for-all now. And to the extent that people start treating it like a free-for-all in the early months of the administration, that's going to make things much harder over the next 4 years. And so, yeah, again, just it's kind of incumbent upon the industry at this point to demonstrate that, you know, there are good actors and that there are folks who want legitimate regulatory clarity so that they can operate in a compliant manner.
Yeah, I think it's interesting. Like we've talked about, you know, crypto is a bipartisan issue, right? But there seem to be kind of some lines drawn, you know, that maybe get more steam with one party or the other. Laz, I want to go back to you. Like, you know, V talked about actually meeting with regulators and obviously being a federally regulated business. But for you guys, like it's in the name, right? Like DeFi Education Fund. And one of the things, you know, we live in a bit of a bubble, you know, in crypto land. You know, we haven't discussed the nuances of like staking versus staking as a service and how that's regulated, although it's like an incredibly important sort of regulatory issue. When you guys are meeting with legislators, whether it's on the Republican side or the Dem side, what do you find are the things that maybe if founders want to approach, you know, whether it's through like initiatives that Stand With Crypto have done or something like what you guys do, or, you know, Blockchain Association, which I think we're all members of. What does a founder need to, what does an industry player need to educate the legislators on? Like, where are you seeing those gaps? And then what can a founder do, you know, if they want to drive home that this is an important issue for them?
Well, I think you got to remember that, you know, folks in Congress deal with who knows how many issues on a daily basis, and so they're constantly being pulled in all different directions, and so it's really hard to become an expert in one thing. And so I think, you know, when we meet with these representatives and senators, they really are these like DeFi 101 demos. Where we just show them how it all works, because they don't really understand how software can allow peer-to-peer transactions and that there's no third party that's moving money for you. And so a lot of lawmakers are really at a very infant level of understanding this stuff. But I think, like, as a founder, if you really want to make a difference, you know, we like reach out to us. We like bringing founders onto the Hill to meet their representatives and their senators, and so that they can explain, you know, what they're building and why they're building it. Because I think what a lot of, you know, folks in Congress want to see is or what they want to know is what's important to their constituency. And if you're in their constituency and you're building something that you believe benefits the world, then they want to know that.
Yeah, I know we're coming up on time, but I'm very curious. Like, we have 3 really unique perspectives, just in terms of an investor, a huge partner and vendor, and then obviously a custodian. I want to touch on some of the other structures, right? Like that are out there for founders. You know, some founders might get legal advice that, oh, you need to set up in Cayman, or, you know, oh, maybe you need a Duna, right? Which is a very interesting sort of new thing that's coming out. And maybe we'll start with Jay. Like, does it make a difference the way a founder sets up their project in how you guys approach investing in them and looking at them? Like, how does that affect your process? And then maybe just, yeah, V and Chris as well.
I mean, the short answer is yes. But I think what I would say is, you know, there are various structures that have emerged as pervasive over the last however many years. And we don't necessarily say it has to be it has to be a Cayman foundation, or it has to be, you know, a disappearing foundation with a Panamanian subsidiary, or, you know, 14 different entities spread out across South America, right? We don't, what we look for at this point is, you know, do you have a structure that makes sense, that was, you know, thought out, you have good counsel advising you. So I think to answer your question, and one other thing I want to hammer home at this point is, you know, we're not yet at a point where exploring new exotic structures for launching within the U.S. Has become viable just yet. I think we'll get there, and maybe we won't need to have so many offshore foundations and weird entities involved in our corporate structures, but we're not quite there yet, right? And I think reinventing the wheel at this point is a bit premature. So anyway, to answer your question, I mean, what can turn us off from an investment is some bizarre corporate structure we've never seen before that is somewhat inexplicable and hard to unwind, right? So I think, yeah. Does that answer your question? Yeah.
Yeah, Chris, go ahead.
I was just going to say, yeah, I mean, I think that's important is right now there's hope that there's going to be change in the future. So there's not really that change yet. So I think you want to, as a founder, you want to keep yourself flexible and don't do something that's going to be really hard to unwind, like create some kind of very convoluted structure that's going to, be impossible to switch out of once there maybe is a more streamlined solution. And then, if you're a founder and you're trying to build something that's durable, you should talk to a lawyer at the very beginning. That's someone that is like a real expert in the type of product you are trying to bring to market, and not kind of just a general kind of corporate lawyer who may know how to incorporate a Delaware C Corp or something.
And I know it can feel expensive and slow at the beginning when you're excited to launch and get formed, but I can assure you that it's much more expensive and much more consequential if, 2 years in you realize that you've entered into a structure that's very difficult to unwind and is going to make your plans going forward very difficult.
Yeah, and V, I want to, I know we're almost up, but finish the best for last. Is TradFi coming? Are you thinking?
Oh, they're already in the chat. Yeah. They're here. Look, I think they've largely been on the sidelines because of the lack of regulatory clarity. And I don't necessarily think they're even waiting for that. They know it's coming. And so they're diving in big time.
Exciting times. Hopefully price can correlate with policy a little better at some point in the future. Please join me in thanking our panelists. Thank you for your time, and hope you guys enjoy the rest of ETHDenver.